Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 23rd of May. Starting off with the FTSE 100, which is rising as the IMF admits that it was wrong about a recession in the UK later this year, but I suppose as it's always wrong, it might be wrong about that as well. In terms of the chart, we've got the 50-day line there around 77.10, and above that we're looking for a break of that February resistance line at 78.80 to take us up through the 8,000 area, and ultimately maybe over the summer up to 8,300, which is the top of that rising trend channel from August. If you're cautious, you wait for an end of day close above 7,800 or 78.80 ahead of a potential move towards the 8,000 plus zone. On the downside below 77.10, the worst we're expecting is around 76.30, which was the initial April support. RSI on the right side of 50, neutral 50 at 52, and maybe needs to be a little bit higher so we get confidence that we will follow through on the upside of what looks as though it is an inverted head and shoulders in place on the daily chart from February, and the neckline there at 78.80. So a lot of upside there, 600 points of upside potentially if we break 78.80. So that hopefully will cheer one or two people up. As far as the DAX is concerned, you can see that we've already had our breakout there through February-March resistance. That was around 15,700. We established new support at 15,900 and gapped through the 16,000 level above 15,900. We're looking for the top of that rising trend channel from September as high as 16,800 by the end of next month. Only at the moment, only back below 15,700, risks a move down to 15,500 at the floor of the channel and the rising 50-day line, but that's the worst we're expecting at the moment. Moving along to the Dow, which has been the laggard, and here you can see that still dancing, well, a bit like the FTSE really, just dancing near the 50-day line. In this case, it's rising, which is positive, 33,200. Looking for a break of the April 2022 resistance line there at 34,000 to take us much higher. That would be within the rising trend channel from the late summer last year as high as 37,000 sometime over the summer. Presumably that can only happen if we manage to deal with the debt ceiling issue. RSI well below 50, so that might be a reason for people to wait for it to break back above 50 or wait for a break of 34,000 before deciding that this is a bullish market. On the downside, the worst we're expecting is a test of the 200-day line and the floor of that September channel at 32,800 over the near term. On to Bitcoin, which has been as frustrating as the Dow. Here you can see that we've been back in the the March support area. That was around 26,700. Had a brief dip below it, a one-day dip, but that looks like a bear trap, and waiting for this market to either break the resistance line there from April around 27,700, or maybe more comfortably the 50-day line at 28,400, accompanied by a break of the RSI back above neutral 50. We're still down there at 47, but it has to be said with the recent price action that solid support, solid looking support there at 26,700, it may be that the post-April decline is finally out of the way. On to the stocks, and excitement in the air for Andrada, given the way that we've got a golden cross between the 50 and 200-day moving averages. I suppose it happened actually yesterday, but we follow through on that. 6 pence is the big resistance here, or the resistance area. We want to see more end-of-day closes above 6 pence, preferably maybe even 6.3 pence, which is the top of that triangle from last June, through 6.3, looking for up to 8 or 8.5 pence by the end of next month. But hopefully that golden cross, which can be a buy signal, will push this market along, especially while we're above recent support at 5.5, above 5.5, looking for 8.5 there on Andrada. On to a stock which is not exactly high profile, but may become more so over the near term. Bay Capital gapped up today and is also well clear of the old November resistance at 15 pence. Above that, we're looking for 28 pence as soon as the end of next month, and that process of recovery hopefully will accelerate as the 200-day line starts to go flat from falling. Moving along to one of the more followed stocks, Barron Oil, which may be ready to recover now after falling back quite painfully since February, or I suppose since October as well. Here we've had a gap to the upside, bullish divergence line there as well for May, and that suggests that we could at least head back up towards the top of the triangle there on the daily chart since March, up towards the 0.16 pence level, maybe as soon as the end of next month. If you're cautious, you're waiting for neckline resistance of 0.12 to break, but obviously that would give away some of the potential upside. But a bear trap gap reversal accompanied by bullish divergence is a valid pair of signals there on a technical basis for the upside at Barron Oil. Moving on to one of the stocks which has hopefully been a pie in the face for the bears and continues to be so, or will continue to be so. Here we've got Chill Brands. We had our levels there, initial target there, 8 pence, next target there, 11 pence. Above 11, we're looking for as high as 20 pence, but obviously we've come up a long way and might need to cool off a bit. But ideally, above that old initial May resistance, 8 to 9 pence, then 20 pence could be in the offing over the next 1 to 2 months. But everything here really depends on how where the support comes in after the gaps to the upside that we have seen. On to another bear target, which is quite deliciously rising today. Iconic Labs. Here we've gapped through the 50-day moving average, and in fact we also broke a resistance line there from February. Shows that we may have a consistent move to the upside now. An extended uptrend line in the RSI window as well from February, so that also backs the idea that this is the turning point. And the view now is that above 0.03 pence, we've got a potentially a move not only to retest February resistance at 0.008 pence, but up to 0.01 pence. But obviously, one of these micro cap and micro share price situations may not be for everyone. Moving on to Marchal or Marechale, depending how you want to pronounce it. Here, MAC, which is the Epic code, which is rather better name, has bounced. We've got a rising 50-day moving average off the lows, uptrend line in the RSI window, which is also helpful. And the view here is that at least while we're above the 50-day line, looking for as high as 2.5 pence, and that April resistance line there on the daily chart from last year, maybe a bit higher than that, but let's go for 2.5 pence, maybe as soon as the end of next month, especially while we remain above the 1.5 pence area. Another stock which looks like it's trying to revive itself now after a rather messy chart here, but Minoan broken that line of resistance there from March last year. That was around 1.1 pence. Above that, we're looking for 1.5 or 1.6 pence by the end of next month. But the main thing here, I suppose, is that we've turned around after a bear trap last month below the old 2021 support at 0.85 pence. So finally, Minoan may be coming to life in a good way. Looking on to the Aquis market, I suppose somebody has to. It's apparently 10 years of the Aquis market, so we're dancing in the street off the back of that. Here we've got Quantum Exponential, which is one of the better situations there. Nice sideways shuffle along the 50 and 200-day moving averages and the 2 pence level. And above that, we're looking for 4 pence as soon as the end of next month, and maybe much more, given the area of the market this stock is in. So quantum computing, one of the flavors of the month alongside AI. On to Southern Energy, which I've been covering quite a lot of late, and the news today backing up the idea of recovery. Here we've got the top of the initial target here up to 25 pence, which is the top of a broadening triangle there from March, but it could be the case that we're looking for and justifiably looking for a new level to the upside, up towards the 40 pence area maybe by the end of next month if all goes well, and especially while we're above a recent, the 50-day line, 21 pence, and recent neckline resistance for the shares. But you tend to see 10, 15, 25, 40 as a progression in a recovery situation. So 25 to 40 is what we're looking for on Southern at the moment. On to Ura Holdings, which has announced fundraise and also the arrival of Andrew Austin, the man who gave us 42x at Rockrose and has also done well at Kistos. Here you can see that shares have Got up to the main resistance area around 2.5 pence. Above that, we're looking for 4 pence. That ties in with that 25, 40 pence type of progression that you tend to get, and maybe up to 5 pence as soon as the end of next month, if we can get a decent weekly close through 2.5 pence. Upside valid certainly while we're above the 50-day line at 1.9 pence. So let's see if URA can exploit the Andrew Austin pixie dust. Finishing off with a stock which a lot of people have requested off me over the last day or two, looking for a recovery. There is a glimmer there with that break of that line, resistance line there from February at 1.3 pence. We want to see plenty of end-of-day closes above 1.3 pence, which may or may not come. But in the meantime, if we can break 1.3 convincingly, then the gap on the chart there up to 2 pence from the beginning of the month could be the target. But recent support around 1.1 pence looks as though that would be the stop loss. The other positive here, and the reason we're including it today, apart from all the requests, is the bullish divergence there. So we had lower lows for May, but a higher RSI trace, and that may provide the momentum to at least fill that gap up to 2 pence, even if the shares then fall away after that. That's it from me today. More updates tomorrow.